Hey, Happy New Year!
Woohoo.
Happy New Year, guys.
Happy New
How are
Year.
you? Happy New
Yay.
Year.
Yeah,
Yeah.
yay, yay.
Yay.
Hey, everybody.
Hey.
So everyone got their New Year's resolutions all broken by now? It's the 3rd of January. Mine would be broken by now. That's why I don't make them
I'll be breaking some tonight.
anymore. Good for you.
Hey,
That's
oh,
funny.
that's hilarious.
No, we haven't had a meeting in a while, but it's holidays are tough, you know. I just got back from the Ozarks. By the time I got back and unpacked, everything was 8 o'clock last night. So it's a nice place down there. We were down around Branson. I don't know if anyone's been there. Maybe Scott's been over there. He's kind of close to there.
Yes,
Yeah,
several times.
yeah, pretty nice. I was surprised how busy it was. I wasn't expecting it. Last year we went to Eureka Springs and it was about to close down, and it was just locals and a few tourists. But Branson was different. It had one thing I noticed. There were no young people there at all. It was packed with with walkers and wheelchairs and made me feel younger. But um, I didn't know if that's just the way Branson is, and they tailor to older crowd or people don't, younger kids don't have money or whatever. But it was just kind of weird that number one, it was really full around New Year's because they were closing down a lot of stuff too. But interesting. But there's a lot of old people spending money down there. Older.
That's what I've
Well,
always heard. It
yeah,
was more of a like in Birmingham. I think they had like bus tours to where they bring you from Birmingham to there,
Yeah.
which always fit that older category of people.
They have they have a lot of shows and they're okay. They're not Vegas shows. Um, but they're okay. And I've
they
been around
try.
music. Yeah, I've been around music and productions a lot. And the group I was with, they enjoyed the show. I thought it was a little cheesy myself, but I've been around it a lot. So I see it differently and I watch different things. Um, but it was okay. Everyone had a good time. And spent a lot of time. The girls shopped a lot, and we spent a lot of time in the bars watching bowl games and stuff. So, worked out for all of us. The weather was pretty nice compared to what we're about to get.
True.
Yeah, we've had a cold front the last couple of days here.
I really feel bad for you and there in the Panhandle of Florida.
I
I'm sure you're
do.
going to get hit by a lot of snow and wind. Oh, and wait, no.
It's funny. I saw something where they say if this cold front that's coming down dips further down, Florida could actually get some flurries. I mean, that would be
Heart
unique. And
breaks.
But do you have some change to put on your tires or anything?
what if I just don't go? Because nobody else does, and they're all idiots when it rains.
I moved to
Oh,
when I moved to Houston. I went down to work for Compact Computer. It was right when they're starting. And my first day, they had me in an airport out by the or a hotel out by the airport. And the first day, it iced, and so I drove all the way in. I'm from the Midwest. Drove all the way in. It was probably 25 miles to get in there. There were cars on the roofs and things. I'm like, this is just a little ice. Got there, the place was closed. 2,500. It was like my first day, and I go up to the security guard. He's like, "Oh, well, didn't you call into the phone number?" I said, "No, I haven't even started here yet. It's my first day." And so, anyway, he let me in, and I went and saw my office. There was a couple people in there. I left about 10, went back to the hotel. Next day, same thing. It was ice was gone. The streets were normal. I got in, and no one was there. Same security guard, and he's like, I said, what happened? He says, well, they forgot to turn the message off. So everyone called in and no one's coming in again today because the message said, stay away. So that was my second day there. And I'm like, man, this is a pretty easy job.
Yes, 10, 15, 19, 44.
What's that? Oh, that's hard. All right. Well, we haven't had a meeting in a while because it's been the holidays. I don't do much, well, I don't do any trading during the holidays because the volume's down, liquidity's down, all the traders are gone. The plan that I use, my trading guidelines are kind of geared to a full normal market. And basically, what we saw the last 2 weeks were pretty much retailers trading among themselves and some window dressing from fund managers, that kind of thing. Volumes were low. We get lower volumes. That's kind of where the Santa Claus rally comes from. Lower volumes get you some higher prices, but we didn't really have a Santa Claus rally. Today it's up a little bit. But anyway, I'll start again looking on Monday, and I watched through some of the markets and some of the sectors, and I put some charts and sectors out, like the XLE was bouncing off its intermediate support level. There were a few sectors doing that, and I'll be watching those, and we'll see what happens when the normal market returns Monday. And remember, there'll be a lot of pent up orders probably Monday coming in, so should be very volatile at the open Monday morning. So if you're going to trade or do anything, keep that in mind that there may be some volatility, ups and downs. I watched a lot of, when I was gone, I watched a lot of the markets open up early in the morning and then close down in the afternoon, and that's rug pulling a little bit from some of the institutions that might be around some of the people that are playing with window dressing. That was before the end of the year. But again, we're still kind of slow. Today's a good day, but when you look at the 7 days of the Santa Claus rally, it really didn't materialize. And there's a lot of stuff going on. We got an inauguration coming up in 17 days. We got a lot of policy potential changes. We've got a lot of unknowns. So it's going to be quite a ride. We got the Fed out there, and they don't seem to know what they're doing at the moment, whether it's going to raise interest rates, lower interest rates. They don't seem to have control on inflation. They don't seem to have control on some of the employment. And we'll see what happens. February 7th, they're coming out with a revision of the second quarter of last year. If you remember when they came out with a revision of the first quarter on jobs, non-farm payroll, it dropped 818,000. So we'll see if that happens again. Then basically that'll wipe out all of the job growth basically from last year. And if you look at the charts again, it's or not the charts, but the reports, a majority of our job growth has been part-time job growth and government jobs. So that'll be interesting to watch. That's in February, but a lot of stuff coming up. So today I'm not gonna go into too much depth on stories because it's been kind of dead, other than some of the tragic stuff going on in New Orleans and in Vegas and how that's all playing out, and we'll see what happens. But we got a vote today for House Speaker, and we'll see how much trouble that causes, and just a bunch of reorganizing, reassessing through the government and markets. And again, the market's not the economy, so the market will play as the market does. That's why we look at charts. So I'm going to start out a little bit. I'm not going to go through all the news, like I said. I'm going to go through a story that's kind of interesting because I know people like to listen to analysts. So I had a little story and a study about analysts and how much they care about us, which they don't. And that's been my experience personally with analysts. And then I want to go into last year's markets and how they performed relative to both the consumer and monetary inflation and where we might go in the future. And I want you guys' opinions also, before we start out what I consider the real kickoff, which is Monday. So I'll get going here. There was a study, and this is about analysts. Okay. And, a lot of people say, well, the analysts say it's going to do this, the analysts say it's going to do that, and I've been, in the business, and I've been to the big trading houses, and right, one hallway, you go down the hallway on one side or the analyst side of the trading business. The other side of the hallway is the trading side. And basically they work together, that I saw that the analysts listen to what the traders want to buy, and then they make recommendations based on what their own in-house trading is going to do. And so if they have big position, at a certain position, they may put out a note that says, you know, we're going to buy, or this, you know, we're going to upgrade this stock. Well, they upgrade this stock, the trading room says, thanks, they get out. So, okay, that does happen. On the other side, they may say, you know, the stock, well, we're going to downgrade it. Okay, and it goes down, trading house buys it, then they reverse it back and get it back out. So I've never really trusted analysts. So when I saw this report, I just wanted to bring it to your attention because it kind of hit home with me. So in a study by Lawrence Brown, Andrew Call, and Michael Clement, and Nathan Sharp, it's clear that Wall Street analysts are not interested in you. Study surveyed analysts from major Wall Street firms to understand what happened behind closed doors when research reports were being put together. In an interview with the researchers, John Reeves and Leon Moskovich wrote, countless studies have shown that the forecast and stock recommendations of sell-side analysts are of questionable value to investors. As it turns out, Wall Street sell-side analysts aren't primarily interested in making accurate stock picks and earnings forecasts, despite the attention lavished on their forecast and recommendations. Predictive accuracy just isn't their main job. The charts from the survey conducted by the researchers, which show the main factors that play into an analyst's compensation, what analysts are paid to do, is quite different from what retail investors think they do. Sharp and Call told us that ordinary investors who may be relying on analyst stock recommendations to make decisions need to know that accuracy in these areas is not a priority, one analyst told the researchers. The part to me that's shocking about the industry is that I came into the industry thinking success would be based on how well my stock picks do, but a lot of it ends up being, what are your broker votes? A broker vote is an internal process whereby clients of the sell-side analyst firms assess the value of their research and decide which firm services they wish to buy. This process is crucial to analysts because good broker votes result in revenue for their firm. One analyst noted that broker votes directly impact my compensation and directly impact the compensation of my firm. So the question becomes, if retail clients is not the firm's focus, then who is? Not surprisingly, you're at the bottom of the list. This incestuous relationship between companies, institutional clients, and Wall Street is the root cause of the ongoing problems within the financial system. It's a closed loop portrayed as a fair, functional system. However, it's become a money grab that has corrupted the system and regulatory agencies that are supposed to oversee it. So I'll show you a few of their charts that they had. Oop, I need to share a screen if I could, Trent.
Go ahead.
Okay, thank you.
Mm-hmm.
So the first survey chart is, how important are the following to your compensation? Industry knowledge is very important. Your standing in analyst rankings is very important. When you go all the way down, the probability of your stock or the profitability of your stock recommendations is 35. The accuracy and timeliness of your earnings forecast is 24. Okay, so you can see that in this study, that whether they're accurate or not really isn't what they're looking at. Industry knowledge, professional integrity, which I think is weird because you'd think you'd want to be, you know, profitable in your stocks and right in your analysis. Second chart they have, if I can get, there we go, whoops. Okay, I guess I was correct. Is, how important are the following clients to your employer? Hedge funds, very important. These are how they rate, very important. Hedge funds, mutual funds, defined benefit funds, insurance firms, endowments and foundations, high net worth individuals, and retail broker clients. So we're on the last, we're last, okay? We're not important at all, we're half, okay? So again, they're not really caring about what we do. Oops. And, okay. Is that the only two I had? Yep, I think that's the only two I had. Okay. So the next thing I wanted to kind of do is look at how the market performed last year and what we needed to do to get ahead of monetary and consumer inflation. So let me go grab a chart here. I can find it. Sorry, I have a bunch of them this week. It's coming, I think. All right, there we go. Let's see, share this one. So it's a chart we talked about towards the end of last year. And we talked about monetary inflation and consumer inflation. And, they tell us, the Fed, that we're around 3% or 3 to 4%. On consumer inflation, we know that that's just the rate of increase month over month. We're probably more at 20%. But we'll play their game. And monetary inflation is printing money, and how much money that takes away from you and your purchasing power. The more treasury bills they print, the less your money's worth, because there's more money out there in the system, such as like when a stock company in stock issues more shares, diluting your value of your shareholder value. So in this chart, you see that monetary inflation, you have to get between 12, around 13% to beat monetary inflation. And then you see over the last 14 years, the SPY has hit about 13%. You got US growth, which is mostly, our mega caps, 15.4. And you got US NASDAQ, which is, technology, 17.9. So if you hit those, you might be making a little bit of a money, or 4 or 5%. But the other asset classes, such as cash, bonds, gold, preferred stocks, you can see aren't even making monetary inflation. So I want to go back and look at some charts of this year and what it looks like to us. So let me get back to those charts. And almost there. Okay, there we go. So I've gone back for a year, okay, and this is the SPY. And, we have swing trade, and we know how to swing trade and in and out. So a year ago, okay, if you had had the SPY and bought it on the last day of the year, it would have been at 472.65. And at the end of this year, you would have been at 586.08. So you'd have made about 25% on the SPY if you just had all your money in the SPY. You can see the ups and downs through the year, but it stayed above the 200. But so here's your profit, though, just by staying in. So if your portfolio is under 25%, in this case, in last year, 2 years in a row, over 20% in the SPY, you would have been better off having all your money in the SPY. And again, when we look at investing versus trading, in trading, we'd be in, we'd be out, we'd be in, out, in. In investing, we've always said, Paul Tudor Jones on this 200, as long as you're above the 200 and the trend is your friend, you're doing okay. So the SPY would have beaten, monetary inflation by, 10 points. So that's a good thing. We go look at, this is the Dow Jones Industrial. Okay, the Dow Jones Industrial over here. Okay, actually it rose up. We came up before the end of the year and came back down. So the Dow Jones was up about 12.5%. Okay, so about half of what the SPY was. And again, SPY has a lot of the big Max 7s in it. In the top 10, they run about 35-40% of the market cap. The Dow has 30 of the more industrialized older companies, but still, 12.5% was pretty good, but it still didn't beat monetary inflation. So had you been in here, you would have probably just broken a little even and a little below, on the Dow. The Qs, you can see the Qs, and again, they're above the 200. So if you were trading and as an investor and you used the 200, you'd have been in. Almost dropped out here, didn't, kept up, did go up above and came back, and we closed a little bit lower than our high. But on average, the Qs were about 26, 27%. Okay, and they have a lot of the Mag 7s in there. And, you know, 100 companies, technology companies. So again, you made some money ahead of monetary inflation in the Qs. Here's just the mags. Paul found this one for us. This is just the mags as the Magnificent Seven. If you would have gotten into this at the beginning of the year, okay, we had a couple close call on the 200 here, but it didn't. Came back up, came back down. On this one particularly, we're up 65.33% in the year. So that was a good one. Okay. When we went back and we looked at the charts before, you know, the mags, the large cap and the S&P, you know, were the asset classes that have beaten monetary inflation on average over the last 14 years. So I'd expect this was a good return. Okay. So if you'd pad your money in the mags only or each one of the stocks, we'll go through those a little bit later, you would have done out pretty well for this year. This is the equal weight S&P. Okay, so everything is equal weight. So the top 10 in the S&P do not represent 35, 40% of the market cap. Everything is equal. So this one is actually up too, but without, you know, with trading, having the Mag 7 at equal weight in the RSP only gave us about 11%. So would have been underneath monetary inflation. So you can see that the Mag 7 really pushed in the equities market, pushed these markets up. And if you had not had those in your portfolio at some way, you probably underperformed the S&P, the Qs, and even to the most part, the Dow. Next one, this is the bond market. So if you had been in the bond market, okay, here's where we started on the bond market. Okay, the bond market actually went down about 2.2%. So this is without your dividends or your payouts, but you would have lost money in the bond market, even though you saw a big rise in the bond market. Here's where you got in, and it wasn't able to maintain, came back, bounced off of it, came right back down to pretty much, below the 9. We're just not looking good in the bond market at this point. So if you'd had a 60-40 traditional, market, and you had one in the SPY and one in the bond market here, 40% of your portfolio would have been down about 2.2%, and 60% would have been up 25% if you just had that spread. Gold, if you'd put in gold, okay, gold had a good year. Okay, starting over here. Gold was up, what did they say? About 26% this year. Again, it's over the 200. So investment wise, it did well. So it kind of matched what we saw in the SPY over the years. So if you had held and been an investor in gold, you would have done pretty well. If you had done some swing trading, you'd see the swing trade here, get out, in, out, sideways pattern. You would have done pretty well in swing trading also in gold. So gold did okay this year when you talk about against monetary inflation. Here's Bitcoin. Okay, and I'm a long-term holder in Bitcoin, just to be open and honest. Okay, Bitcoin started out about $41,000 at the beginning of the year, and it had a nice run up, and probably one of the best runs up because it came after halving. Okay, and we talked about halving. That's where you only get half as many Bitcoin mined every day than you did the time before. And there's only like 1.1 million left. Again, we talked about Bitcoin. We talked about that it's a deflationary. It's not an inflationary product. It's a commodity. It's digital capital. People and institutions are starting to get into this. Now we have potential for a Bitcoin reserve in the U.S., which will cause other countries to do the same. It will cause more demand. Supply is limited. So if you were in Bitcoin, you were up about 121% this year in Bitcoin. So for those of you who are in that, congratulations. Very volatile. We had a run right here through the summer where it was just straight, and then we kicked off, and then the election hit, and you can see what happened. So Bitcoin, if you were in that, we did pretty well, well over monetary. On average, 60% a year is what we've seen in Bitcoin. Berkshire Hathaway, okay, big one. I'm in Berkshire. It's one of my long-term positions. Had you been in Berkshire as an investor, again, over the 200. So you've never been in the bull market or a bear market this year. Berkshire Hathaway gave us about 28% increase just in price this year. So that did well, did better than the S&P. I forget for how many years in a row Berkshire has beat the S&P. It's one of the reasons I have it as a long-term uh, position in my long-term accounts. And I also swing trade it. We know we swing trade it because here's a nice swing here. It just gives us, and then sideways, and there's a nice swing there, nice swing there, and sideways, another swing, and we'll see what happens. But it provides us with both investment and swing trading opportunities in Berkshire. So if you were in Berkshire, congratulations at 28%, not bad. Silver, okay, along with gold, it's a form of money, form of store of value. Now you can see that in silver, we ended up 21.3%. We've spent a lot of time, we've come back down, but it's still for the year it was up. We had started the year below the 200. Okay, so if you're an investor, you probably wouldn't be in there until you got above that. Once we got above it, we popped down just here recently in December.
Catherine is making Kirsty a steak again.
So
When she's
silver
making
again,
herself a
21%, but it was a little bumpier than most. MicroStrategy is one of my long-term holdings, which, it started out, it's just still above the 200, but just dead. And we had some sideways movement, just follows Bitcoin. Okay, in more of a 2x kind of mode. Came all the way up, had a high at 108, came back down, and now we're seeing it kind of bounce back up. But had you been in MicroStrategy, 442.3% this year, which is very volatile. But again, it goes back into the Bitcoin philosophy. So if you study that and you like that, even BlackRock now is telling their clients 2 to 3% in their portfolio in Bitcoin, or you can go buy the IBIT, which is the BlackRock ETF for Bitcoin, or you can buy Bitcoin straight. We've talked about that. We can talk about it later if anyone wants, but that's not the focus today. So, a nice move up on MicroStrategy, 442%. We look at NVIDIA. This has been the darling, and you can see this has been a nice chart, above the 200. This would have been a nice swing here. And then we went sideways like we saw a lot in that part of the year. Popped back up, had some choppiness, still back up. So if you had been in NVIDIA, which was a good play, 174.5% this year. Okay, that beat monetary inflation. That was a good one. There's Meta. See, Meta did the same thing, above the 200 the whole time. Ended up being 66.25% up in Meta, which we'd expect because we looked at the mags and we saw what they did to the SP. We saw what they did to the Qs. We saw what they did when we made them equal weight in the RSP. RSP was only 11%. Okay, so these 7 stocks, plus a few more like Berkshire, helped out these indices. But if without those guys in there, we would have been about 10, 11%. Let's look at Microsoft. Microsoft, I was kind of surprised. I don't really follow it, but Microsoft came up, went up to some highs, went sideways, and then it ended up about 12% on the year. So again, if you'd have been just in Microsoft, you'd have probably broken even when you consider monetary inflation. Apple had a pretty good year. Apple, though, it started out bad and it went down below the 200, and it was down and out, came back above the 200. Okay, if you're an investor, that's a good spot, like Paul Tudor Jones to get back in. Again, it came up nicely, dropped down here at the end, in the end of the year and beginning of the year. But Apple was up a nice 30% on the year. So again, that was a nice increase, got about double of monetary inflation. Good. If you went into small caps, I know a lot of, when the interest rates started going down from the Fed and everyone said jump into small caps, we bounced out, but now we've come back down. Small caps would have gained you about 9.5% on the year. So again, small caps would have done too much for you at that point. But 9.5 in a normal year is good. But when you have inflation, it takes away your purchasing power. It takes away the amount that you really need to earn. So that's kind of my summary of different sectors. And I guess, and I'm opening up the discussion for you guys, because I guess when it looks at to me, it was the Mag 7, Bitcoin related stocks, and a few, other areas out there that really pushed the market ahead to the point that you made more than monetary inflation. Trent, you have anything to add to that?
I think I find this year interesting because, like you're pointing out, the majority of the gains in the indexes, the S&P, the NASDAQ 100, were pretty much related to 7 to 10 companies. You had another segment in the whole crypto market that did real well. Bitcoin in particular, Ethereum did well, a
Yep.
handful of others.
Exactly.
And then you look at what's happening in the bond market, and Stanley Druckenmiller called this, and I don't know how much money he's made on this call, but he pointed out in very big detail, I think it was like probably mid-year or something, about how the US national debt has got to get under control, that people are going to start losing faith in our currency slash our bond market. And we continuously try to borrow money and borrow money, borrow money, borrow money. And so we're running this debt. And he basically shorted the 10-year treasury and a couple others. So he shorted the bond, long the yield, and just made a fabulous return. So, for instance, in September 17th, the 10-year US Treasury bond yield was 3.64%. Today it's at 4.58%, meaning the yield goes up, the bond value goes down, which means, and as Mark pointed out, 60-40 split, 40% of your portfolio basically tanked this year. And depending on how aggressive a bond allocation you had, it was it was a sizable thing. And I think this is sort of over the holiday, I was thinking, where is this investing thing going? And because of the popularity and the adoption of Bitcoin in particular, um, are we starting to see a narrow shift, and will in 2025 see a very narrow shift in a high volatile market, even more so than we have in the last 2 years? And my thinking is yes. And I think this is where I was like thinking today, I was like, what are we trying to achieve here? And that is to get positive returns that outpace monetary inflation, which is you got to nail 20%. So how are we going to do that? And how are we going to be segmenting our thinking to just one category or one silo? Or are we going to be open to different opportunities? And I think this is probably the year where we're going to see more opportunity-based investing and research. I've been digging into crypto a bunch here recently, and I'm looking at charts on some of the top market cap crypto coins. And if you apply your swing trading technical analysis or just technical analysis, you'd be looking at, oh, well, that's setting up pretty nicely. That's setting up pretty nicely. And then I look at the Mag 7 and I'm like, all of these companies are starting to turn. Tesla took a dump yesterday because they didn't deliver as many cars. So I'm starting to look at this and going, this run we've had in 2 years on the Mag 7 and semiconductor world, has that run its course? And where are we going to go next? Is the bond market a place where there's opportunity in TLT, IEF, or one of these other bond ETFs? or is that market just tainted because of the US macro, US economics? And so I think this year is going to be much, much more narrower and more of a stock pickers market. And I would encourage everybody to broaden out their thinking of what is a possibility. Is it oil and gas? Um, is it consumer goods, consumer discretionary? I think at the end of the day, and I came to this conclusion on my walk this morning, and that was I really don't care how I make it as long as it's legal, moral, and ethical. I don't care if it's buying natural gas or buying the latest semiconductor stock. I just want to make money. And I think this is going to be one of those years where you got to open your thinking to that. And I'm like, if I can crank out 20+%, 50% returns and take in my risk factor out of 5 being the most risky and 1 being the least, I can be between a 2 and a 3 risk factor. And I end the year with achieving my goal. That's my focus. That's what I think. And I think this is going to be the year where that kind of thinking has to be put into play, because I do think this first part of the year is going to be rocky because a lot of the economic data is, I think, going to catch up to this market. So
that's a good point.
that's my thinking.
I think you're right. I think, I've been looking at, my philosophy on investing and trading is long term, and I don't have very many long terms. I have 3 or 4 long terms that I believe in, and I'll watch them. I trade. I don't trade them. I do trade, Berkshire. I'll trade Berkshire, but I have a long term position, and if I want, I'll just keep it. So those have done really well, I've learned from, even Warren Buffett, that you don't need to have, a portfolio of 50 stocks to make it work. You can have a portfolio of 3 or 4 good ones, that bring in cash flow and do the right things and things that you believe in. But you have to look into those kind of things. That's, why I'm into Berkshire. That's why I'm into Bitcoin, some of the Bitcoin ETFs and things. Those have done well. Now they're very volatile, and I've been through downsides with them too. So you got to have a bit of a conviction on your long term. And then on the short, and then I have a cash strategy. And I know a lot of you do too. And, last year was a pretty good year for 30-day T-bills. We were making over 5%. Now, not so much. Okay. But we're still making 4-some%. So if you're parking cash, that's still a good option over there. And CDs also. Yeah, Paul. CDs also, though, have now kind of surpassed. I've moved some of my short-term cash positions into CDs, paying more than, so the money's always working. It might not be working at over monetary inflation, but as I was telling Trent before, I invest in the money markets to keep my money moving, so that every week I have an amount of money that's coming out of a CD that I can either reinvest in a CD or a treasury bill, or if the market's right, I can take some of that money and reinvest or swing trade into that. Otherwise, I'll put it back in and I'll let it sit, knowing that next Tuesday I'm going to have another group of money come up that I can use. But the money's always working. And then my third leg of the stool is swing trading. And if you look at the paper trade portfolio, I've never really looked at averages and stuff. But this morning I pulled it up, and we made an average of 2.19 or 2.2% per trade, and that's on 323 trades. And I don't trade all that often. I don't trade a lot. And some weeks, like the last 2, I don't. So if you break that out, and you can have 323 trades at 2.2%, that gets you about 2,200%, on those trades. And if you're doing it within an IRA, so you're not paying taxes, that's even better. Okay, but it takes a lot of work. You got to follow a trading plan. You don't need to be in it all the time. So those are my 3 legs, cash management, long-term investments, and swing trading opportunities, in and out. And between those 3, I spent some time over the last 2 weeks just looking at all my equity assets. Okay, not my real estate, not anything else, but equities and crypto, and put them all on a piece of paper and said, okay, what did good, what did bad, you know, what do I need to adjust, and how do I get that? How do I get above that 13% monetary inflation, and what are we looking at? And you know, for me, I'm looking at. I still think the Mag Sevens will probably get us, you know, above average. You know, as long as they keep rolling, I'll be more cautious this year. The S&P, you know, S&P is above 20% for 2 years in a row. That's unusual, but 3 years in a row would be almost not unheard of. Okay, so I'm not expecting the S&P to do that. But again, if you're trading and if you're investing above the 200, you're doing pretty good. And then on the other side, I'm going to start looking more at sectors. Okay, and what I found in sectors, and I put this on this week, and you know, in the Discord, you know, I'm looking at a lot of sectors and stocks that have come down, and they've hit this intermediate support level. Okay, and this is as strong of a level for me as the intermediate resistance level. So I'm looking. We talked about energy. I've had energy for 2 weeks. I've just been watching it trade along this line, and now it's popped out above the 9. You're seeing what's happening today, and you go into you look at, you know, I'm just going to pick a few out of Devon Energy. You're seeing Devon come up. Okay, we're below the 200, but again, these are swing trading opportunities that, again, look, that's a nice level of support. Let's go to ExxonMobil. Again, chart's starting to look the same. I mean, if you wanted to trade this and you got the oscillators looking good, you're under the 200. I mean, this is a place to trade. And I said personally for me, you know, I'm not trading during these 2 weeks because it's just not a normal trading. But there are things out there that are starting to turn a little bit, and all you have to do is go through and look at the sectors. Here's healthcare, hasn't quite got it yet. Okay, it bounced off of it and it's just kind of going, but now we're seeing it's trying to get above the 9. We'll see if healthcare can come back up. Okay, I'm just gonna put J&J just because I know that's in it. See J&J's come down, down, boom, 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 boom. So these are the things I'm going to be watching for next year, because we do have, you know, with this downturn, we do have that on the downside, which will give us some opportunities on the upside. And then on the opposite side, you know, you're looking at XLK, which is technology, trading right along its, you know, its intermediate resistance level. So these, you know, I'll watch, but I would rather trade down and with some room to run on the field than to be right here trading on these levels here. Not that you can't, but I take this line very seriously. So, you know, where's the money flowing? Well, it's been sideways here, you know, basically in technology. And so again, I'm looking for opportunities, and maybe we'll have opportunities. Maybe we'll get a bump next year, you know, when the market starts up. But these aren't really it yet. In the when you look at it, NVIDIA, see, NVIDIA's just been trading sideways on the daily chart, you know, right, and everything's just kind of scrunched up. Something's got to give to pop these up or pop them down, and we haven't had that yet. Okay, so that's why I'm cautious over these 2 weeks. And next week it'll start up again, and I'm going to be looking at energy. I'm going to look at healthcare. I'm going to be looking at others that potentially may pop up. They're not there yet for me, but I mean, if you want to trade under the 200, which I have, there's some right there today you could do, but the volumes aren't there. It's Friday for me, another weekend coming up. I just don't like being in a swing trade position over the weekend. So it's kind of my thoughts of last year and this year, and you know, I'm going to remain in Bitcoin, and I over the holidays I've nibbled on it. You know, I had some limit orders hit because I think, for me, not financial advice, if on January 20th, President Trump signs an executive order addressing a reserve Bitcoin reserve for the United States, that I believe that's going to be a catalyst to pop it. Now, he may not do it, and that may be a catalyst to bring it down, you know, but I've been in it for a long time, just like Berkshire, so I have a good cost basis, so I'm not really too worried about it. But that's just my thoughts, you know. So I'm looking at the mags, I'm looking at at Berkshire still. I don't know anything about the quantum computer stuff. That seems to be the hot topic. So maybe we should be watching those for trades and stuff. And I'm going to continue to look for swing trades. I'm going to continue to manage my money that's not in the investment world and try to get the most out of it, even though it's not the most that we want, right, Paul? But it is something. So that's kind of my thoughts. I'm interested in you guys' thoughts because, this is kind of an open end of year session. I see Bob has his hand up. End of year session, and I just kind of want to go over where we've been and where you guys think we're going. Bob, the floor is yours.
Yeah, no, very short floor, high yield. Does that fall under cash management?
Are you talking about corporate debt, or are you talking
No,
about?
no. I'm talking about the company high yield, where they're writing calls, and that's income. That's one that you engage in.
That's something I'd put in cash.
That's in
my
cash.
Yeah. And I do have some of those. I have Misty, MSTY, which follows MicroStrategy. It pays out monthly. You got to be willing, to take the principal risk on those because, again, if the underlying equity such as MicroStrategy goes down, then the amount of the principal amount that you have in Misty will go down also, and then probably your payout monthly will go down because it's not going in the right direction. But if you believe that it will, and again, I showed you a model that had $8,000 invested in 4 of these, so you have $8,000, but it's still a cash flow every month. But you got to worry about your principal amount. If you've invested $8,000, how much of that principal are you willing to let it go down to? 4,000, 3,000, or are you going to let it just sit there and just generate cash until it, whatever? But again, if it gets down below your risk management, you get out. You can get out of those the same way. You use the technicals and get out if you want. Good question, Bob.
Well, let me just say this. Obviously, when you brought this up in October, I believe,
Yeah.
I got extremely interested in it and started looking at it and actually started buying some. And it was pretty interesting here in the past 2 or 3 weeks, past 2 weeks, they really dropped.
Yeah, because Bitcoin did.
Yeah, but what happened yesterday and today, they've started resurrecting themselves.
Yeah, I guess
and
it's
that's because I presume there's dividends, there's payouts coming. I assume.
Yeah, there are every month on Misty. It's around. I think it's around the 20th, the 3rd week of the month, I think. But again, if you're in the belief system that I am, that I believe that Bitcoin as a commodity and a capital digital asset is going to rise as it has over the last. Today is Bitcoin's birthday, 16th birthday. Today was the first day, 16 years ago, that the Genesis block was formed. So it's a big day for Bitcoin. But I wish I'd have been a little more attentive to it back then. We have as humans, we have a way of foo-fooing everything that's new, and it's given me a different perspective to start looking a little more at stuff, like AI and stuff like that I should have been in maybe a little more seriously on my investment side. But again, that's where I did the homework on Bitcoin, and I do believe, for me personally, that it's going to continue to go up. And I see people like Tom Lee, who I respect, and he's not some whack job out there. And he says, in his mind, it's going to $250,000 this year. Okay, and he's been pretty spot on. And so, and again, not financial advice, but it doesn't matter if it's Bitcoin or it's AI or it's quantum computing. Get into it and understand what it is if you're a long-term investor, and figure out why you're in it, and it helps you in a long-term sense. If you just try to chase it because, it's NVIDIA, I'm going to chase it and everyone has it at the cocktail party or the bar I was at, that's probably not the way to do it, but people have done it that way.
I just wanted, this past weekend, not this past weekend, the weekend before New Year's, I went to New Orleans to visit my brother and sister-in-law, and my nephew. And my brother-in-law is, I've spoken about him a couple of times. He owns a company that manufactures pumps and valves for oil and gas rigs. And so he's one of these guys you get in a conversation and 24 hours later you're still talking. Um, and we talked a lot about the oil and gas industry and what's happening there. And I asked him, with Trump coming in, this whole drill baby drill thing, is this exciting for you? And he goes, nah, not really. And I was like, really? He goes, yeah. He says, you have to understand that I think it was 2014 or so, there was a major capital expenditure in building out a lot of oil and gas rigs and exploration and all that. And I think it was actually earlier than that. He says, so a lot of money was spent and a lot of big move in the energy market was right around that, I believe, 2014 period of time. And then it sort of has tailored off since then. And so, as he pointed out to me, he's like, we're excited a little bit, but in the end, we're realizing our product line is becoming very commoditized. And what we used to sell a pump for, $2,000, we're now selling it for $500. And it's become a very competitive commodity-based market. He said, but when it comes to the new exploration in oil and gas, he says, what we're seeing more of is a very deep water exploration, in particular below 5,000 feet. So you have what we see here in the Gulf, from upward down to 1,000 feet is typical, but now we're seeing a handful of companies go below 5,000 feet because of finding new wells and finding more pockets of oil and gas. He did say, he said it's very interesting if you look at I-20, Interstate 20 in the United States that runs from Florence, South Carolina to where it meets up with Interstate 10 in Texas on the west side of Texas. He said this is the area you need to be paying attention to. And he pointed out, he said Meta um, just signed a $10 billion deal in, I think it's Richardsonville Parish, Louisiana. And it's just off I-20. And I-20 is a major pipeline for the internet. Okay. And he pointed out, he says, I was like, why did they do it there? And he goes, they have two things that are plentiful in the state of Louisiana. They have natural gas and they have water. And how do you cool these data centers? You use water cooled systems. How do you power them? You're powering them through natural gas. And as he pointed out, this is going to become a bigger thing. So I went and did some digging, like how many data centers are, what is the number of data centers between Florence, South Carolina and West Texas? Atlanta has a ton of them because they're a big city. They have a lot of different companies that are building data centers there. Louisiana is becoming very popular as well. Dallas has a big amount of them. And it was interesting just having this conversation about oil and gas. And he's like, yeah, we would love to have another rage on, building out more and more oil and gas rigs. He said, but the money has been spent there. What you may see is a rise you'll see a rise in the industry because of Donald Trump, because of his pro drill attitude, and you'll see more of that coming back here. He said, but don't expect anything major as we go into the rest of the year. Nothing like we saw back in the day where oil jumped from 70 to 100 and some dollars, and these companies were just printing money. He's like, it's changing, and we're having to go to deeper depths to find new pockets of new of supply of oil and gas. And I thought that was interesting because it sort of combined two things we talk about. We talk about the Mag 7, we talk about data center development, and you bringing energy into this. we've got to power these things. And I started to wonder, is this a opportunity from a municipal bond perspective? And I'm just talking out loud here, but is there an opportunity in these pockets in our country where there's plentiful water and oil, or water and energy, that these municipalities are going to start bringing in more of these high-tech data centers, energy sucking companies that could eventually be, if you're looking for income or a fixed income type trade or type investment, are we going to start seeing more of that? I don't know. I thought it's something I was just looking at, where is the development in our country? Where are companies going to come and build? Kerry talks about the infrastructure build out of AI. Um, I was like, well, geographically, where are we going to see that happen? Well, you want mild climates where there's not big disasters, and you want it to be in a corridor where it's easily accessible. And I think those are, if you look at our country and how it's divided up, I think I-70 runs from Chicago to Salt Lake. I-20 runs from, as I said, from Florence to South Tech or West Texas. And I think these are kind of areas when you start to think about where is your long-term investment kind of approach, where are these companies going to gravitate to? Where are they going to get their energy? Where are they going to get their cooling systems? And then just the other opportunities that spread out from there. So it was a very interesting conversation. When he brought up Meta, and we would talk pretty in depthly about what's going on with AI, and he made the comment to me. I said, well, what company do you think is the next 3-year buy? And he says, I'll tell you this: when Tesla brings their robot down to $22,000, we're buying 100 of them. He says, I'm going to go from, what did he say? He's got 150 employees, which he's brought down from 450 using robotics. He said, I'll
From
bring
Tesla?
that he'll bring that ratio of employees on the manufacturing floor in half, and he'll increase his engineers and highly educated people who can run these robots. He says we'll be eventually, if he can bring the price down, if Tesla can bring the price down on these robots to 22,000, we'll just buy as many as we can. And it was interesting thinking in his part. I was like, that's interesting, because how many other manufacturers are thinking the same thing? Because they run 24/7. Then you need the educated person to actually run the robots, and that's your engineer level education. And it was just interesting conversation. It gave me a sort of a view of where this whole thing, manufacturing, and you think about bringing manufacturing back to the US, what's the biggest cost of manufacturing? Human beings. If we replace them with robots, then manufacturing becomes affordable, and we become a manufacturing power, juggernaut again in this country. So just an interesting thought about energy. Because I just actually bought DVN as a trade. But is it going to skyrocket? Is there a massive demand going to be on oil and gas? And from just talking with my brother-in-law about it, I'm like, not so much. It's more of a trade, but where is manufacturing going? And I
It's
think
my
that's more
understanding that
robotics.
that oil that we come out of the United States is not virgin oil, and it's not typically used for fuel. Like it's shipped out, it's exported. Does anybody know
Yeah,
anything about that?
I think that there's different kinds. There's light sweet crude that's used for
Yeah.
refining, and then there's heavy oil that's more used for asphalt and other kind of shit. But they do ship out some of that heavy crude.
Last week, LGN, I think is the symbol. Kerry talked about this years ago. This is the liquefied natural gas. The last week they shipped it out, one of the first freighters to Europe. So we have a lot of that as well. So that is, and if you watch natural gas, the future contracts on it, it's been jumping higher.
So that's companies like Constellation, right? What kind of companies when you say natural gas, what type of companies are related?
I think pretty much like what everything Mark put up. Anybody who drills, anybody who punches a hole in the ground and pulls oil. I mean, what
Or ref-
comes with
or
oil? Natural
refines,
gas.
refines
Yeah,
too.
yeah.
Yeah.
So what you got, Bob?
Hey, I just want to say, when you talk about robotics, as far as your brother-in-law, he's interested in robotics, getting down to 22,000. You know, your dad, and I'm sorry, Kerry, I'm sorry. Yeah, I know. I
It's all
didn't want to
right.
refer to it as your dad in this. I wanted to refer to it as a noun, Kerry.
Okay.
So, uh, I realize you're old enough not to be offended by that. But what was interesting is NVIDIA. NVIDIA's got a problem. And you know what the problem is?
What's that?
What is it? Is it TMA? Your
Total
father talks
market
about total TAM, total addressable
TAM.
market. Guess what? What's NVIDIA got? They got 7 customers. How do you make money with 7 customers? I'm talking GPUs. Eventually, it's going to run out.
You got to spread out.
And he has a deep dive. I haven't gone out there to see it, but he's had 2 sessions this week on YouTube on this, and I thought this was really interesting. So what's NVIDIA? They got to expand out. They've got to expand out to where they got a lot of customers. And like he's saying 7 billion at $2.99 a month, whatever God knows they're going to sell. I don't know what he's got in mind, but
Right.
I think it's interesting. And one of the things that NVIDIA is looking at, not in 7 billion people, but is robotics. Because there's no question that we're going to have to turn to that more and more to force costs of manufacturing and goods down. And matter of fact, it will be a way of combating inflation.
Yeah. The other element is I was digging into a demographics because my brain sort of thinks this way about capable workforce. And over the next 10 years, where the decline in capable workforce, and that is, so let's say 65 plus, there are more people entering that that age group on a daily basis, and that group is no longer capable of working at a certain level. My generation, Gen X, is the smallest generation in history. Then you've got Gen Y, which picks up the pace a little bit in size, and then Gen Z. The thing is the amount of people who work on a factory floor is quickly declining in the willingness to work on a factory floor. So it really makes a case for robotics. And the fact, like you said, it drives down the cost. I mean, if you can buy a robot for 22 grand and he can work or it can work for 24/7, with a downtime of, maybe a day, 2 days a year for maintenance, and they can continuously efficiently pump out a consistent product, you replace that group of manufacturers who's now turning into their 60 plus. And I was looking at this and I'm like, that's a pretty substantial group of people. What it does do is it puts a pressure on our education system, and how do we educate these people to actually run these kind of factories. But I do think it's interesting. You look at Meta, NVIDIA, they sell GPUs. And Kerry talks about, I think in his video, about how Jensen Huang is looking about spreading out his business. If you look at Meta as well, they're going super deep into AI. And I found this interesting when I got to digging into this. They're not just going in so first of all, AI, you can, if you spend money on advertising with Meta, you can use their AI product, which creates more effective ad content and more return on that ad spend. But they're also developing AI enterprise, which goes out to small and mid-sized businesses. And that is a big deep pocket environment. So if I'm a small business of 3 people, and in this environment, they're talking about the first business that will be a one-man show, one man or woman show that'll generate $1 billion in revenue. And we're getting to that point where small businesses can need to utilize AI. And I think Meta is one of those companies who's jumping on that bandwagon because they know I'm only going to get so much revenue out of ad spend in the near future. I'm only going to get so much from the other sources of revenue I have. I've got to go out after the small, mid, and large business. And their AI development is one of those one of those things that I think will penetrate and grow that market. But NVIDIA, it's, Kerry I didn't get totally into the video where he talks about how they're spreading out into different sectors and different categories of product. I think for any company to do that, you have to. I mean, Kodak is a prime example of a company who died because they didn't.
Exactly.
Yeah. And I think
Hey,
you're going to see
you know
more of
something,
that.
Trent? It was interesting because he brought that up. Let me just say, there's something else that's important about these robotics. I've been retired for 15 years. I came out of a large manufacturing company, a plant, and I worked for 7 international companies over a period of 31 years at this plant. So I got to see a lot going on. But get this, we would want to hire 40 hourly people every quarter. So you know what we had to do? This is 15 years ago. We'd go out to a headhunter, and we live in a very provincial area. They'd take a look at a pool of 1,000 people. By the time they were done with drug testing, we're down to 500 people. Right
Wow.
there, you got a problem. You've eliminated a lot of your population. By the time you get down, we say get down to 100. We'll take those 100, and then we're going to take it down to 40. All right. It takes a lot of time, a lot of energy to do this. So we get to 40 people. We spend 2 weeks training them on everything. And we're a custom shop. All right. Nobody makes what we make in the United States. And by the way, it involves a foundry. So if you see molten product at 4,000 degrees, you don't stay around looking if it accidentally pours. You start running for the exit. Because if it hits you, it's going to kill you.
What type of position are you talking about?
Oh, we're talking hourly people.
So on the factory floor.
On the factory floor.
Yeah.
So get this. Do you know what the education, by the way, this is a state that claims all the money they spend got the greatest education. Do you know what the educational, because we test them for basic English and basic math, 5th grade.
Wow.
And by the way, I got a feeling that a lot of the United States is not much different than where I live and what I've been exposed to. So as a result, as technologies get more sophisticated in that, this is where we come to robotics. And also, people can't stand a mundane task for 12 hours a day.
Yeah.
And by the way, on those, like I say, on those 40 people, 20 would quit after 2 weeks.
So do you visualize, though, the robot would be able to take that position that you'd offer?
There's a lot of positions that the robot would be taking the place of.
Well, I'm talking about the 50, you just mentioned that you'd be looking for 50 people, I think.
No, I was down looking for 40 people. And
so can the robots do that job? Do you visualize?
Well, back then I would have a hard time, but today I visualize with how this technology is advancing. I think so. It's got to. And by the way, you know what we've depended on? If you can't make it in the United States, you make it in countries with low cost labor like China.
Not with Trump, though, right?
Oh, no. That's going to change. Yes, that will change. No, but you understand, this is how we've really screwed ourselves.
Well, right. But it's not a switch. Everybody says, oh, yeah, just do a tariff. I've been around where I've seen our parts and our assemblies and our full product move overseas, and it doesn't happen overnight. You
No,
can't, so you can't bring it back overnight. Anybody that thinks that it's not, it took us, I'm gonna say 40, 50 years. We migrated all the stuff because we didn't want to bend the metal. We didn't want to produce any of those parts. We went overseas. Now all of that's done overseas. You think we're gonna be able to just bring it back to us? Not
no,
gonna
because
happen.
we
Because
we lost the technology, we lost the wisdom, the mind for doing
the pro-
that.
the
I-
people don't
I
want to
don't-
work for that, and the prices and the processes are overseas now for all of those
Exactly.
parts. You can't
Yeah.
just do it. It's so
I don't think,
what-
I don't agree on the metal part. I've got friends with metal shops here that have plenty of capacity and they're all robotic. You know, they're up to speed. It's not like we don't know how to bend metal anymore because we do.
but not at the same cost.
Well, it will be when tariffs come in.
Yeah. I'm not sure that's
And
smart,
I
though.
agree. I agree with
I-
Bob. I agree with Bob. We sold ourselves out. Okay.
Mhm.
I'm just saying
Yeah.
we just can't turn a switch to bring us back like that, though. I mean,
I,
anybody who
But
thinks
I mean,
here's-
they can't.
I spent 25 years in procurement engineering, and I understand what you're saying, Paul. It does. I mean, if you're talking like flat screens, LCD, because we moved all ours over to Japan, and and to bring those back would take a long time. But if I had to switch metal suppliers, most of my metal suppliers were in the U.S. Because of transport cost and steel costs, and it just was. So I could switch a metal supplier back to the U.S. or a plastic supplier really quick. But when you talk about, oh, I could. I had
I would
2,500
beg to differ.
suppliers.
I would beg to
Are
differ.
you saying I'm not telling the truth? Because I did it.
No, but having been involved in injection molding on any type of blow molding of
No,
plastic,
you're talking about.
let me finish. You cannot beat the cost overseas
No, I'm
for.
not talking about cost.
Oh, okay. Well, then no. Who's going to sign up for higher costs to build it in America?
Well, when you
It's
have a
not gonna
tariff
happen.
or you have some other issue like a company that shuts you down, or we dealt with companies that were our competitors, okay, that made parts for us. So we didn't really want our competitor making parts for us. So we would shift some of that back into the US. Okay, we did a lot of printed circuit boards in the US. We did our own. We had 11 factories of printed circuit boards here. Okay, because we didn't want to send them overseas. That was compact computer. Okay.
I'm just telling you, I worked in a lot of businesses. I worked for Hubble. I worked for Assa Abloy, Sargent, Corbin. Everything I've touched, the products are built overseas, whether it's a consumer, commercial product.
I'm not
Most,
not disagreeing, but I could move them back. I could move someone back. There's a tooling issue, or maybe a lot of times we own the tooling. They just have to ship the tooling back to us. You know,
uh,
so it's not like you can switch a switch and it's like a month later. I agree with you on that, but I could
and
move
you
them
can't
back
take a
within
tool. What kind of tool are you talking about? A stamping? What kind of, like what processes?
anything, stamping, bending, all that.
We don't have the
progressive dies,
machines here that
progressive dies.
you can't take a machine that's a tool that's built in China and bring it into the United States and just
It
plug it
wasn't
into our
built in
2-ton
China.
press,
Ours were built at our tooling shop.
which is very, very rare. Tools that are typically built overseas.
I know, but we
Very
did
rare
it.
that you build tools in the United States. The price is sky high.
I
You go
thi- I think
overseas. to
that
build.
I think the thing is
So we
though,
did it.
if it took 40 years to
That's an
send it
exception.
over, it will take 10 years to bring it back because we'll have different technology, we'll have different processes and the ability to do that. I mean, you think about it, we sent everything over to China and overseas because of human costs, because we could lower, they would do it for a fraction of the
Not just
amount.
human.
But see,
Not just human.
you're talking about lower labor costs is why we shipped it over. Now with AI and robotics, we don't have that labor anymore. We can do it without people, like your
Right.
brother-in-law.
You
Okay.
think we can make an iPhone in the United States? We can't.
will.
We just can't do it.
The thing is, we will if they can do it over
We made
there,
all our
we'll
we made
just
all our computers
eventually
here,
bring it
except for
here.
laptops.
30 years ago. You're behind so much on processes. It's just impossible.
But
You
doesn't
can't, it takes
hey,
time. Yeah, you could do it, but it's
Paul,
going to take time. And plus,
Well,
the United States is going to have.
I
Yeah,
didn't say it's going to happen overnight. I said we
yeah,
can do it.
right. And we could do it, and I'm concerned about the cost. The cost of everything we bring over because of higher tariffs are going to go up. Everything is going to sky. And talk about inflation.
But it didn't before. Last time he was in, it didn't happen. They were the threat of the tariffs kept that from happening. Okay, we've had more inflation in the last 4 years because we're printing money and because we're devaluing our dollars. That's why we have inflation.
I'm only saying, having been in the business and everybody says, oh geez, put a tariff on it. It's just not that easy to build product in the United States. Because I've had built product in the United States, and then
So
I've
have I.
been forced to go overseas with many, many companies. And the number one reason is cost. We save cost, and now we can build a product. And it's always been cheaper to tool it, to process it, to now assemble it, and overall to buy the whole full product that's come from, whether it be Mexico,
Oh, that was
India,
because, but why
China.
was that, Paul? That was labor. That was labor cost.
No. It's not just labor. It's processes. It's not just because they have the tools, not the lower cost of labor. They have better quality for in a lot of instances. There's a lot of different parts of the processes had that, but we've gone to places where we let them design the freaking thing. We just send them a spec and have fun and design it because we don't want to pay people over here to go through that exercise. They
We
failed in a lot of.
We designed our own.
Absolutely, because I'm a designer, but I've managed teams overseas that did the designings and they had to be in handheld in India. Oh my God, it was crazy. But that's what they were trying. They were trying to lower costs such that we couldn't designer no more in engineering because we brought the whole manufacturing got put overseas or Mexico. Or my only point is you can't pick a product, pick any product and say, oh, let me just bring it from the United States, from China or overseas or anywhere and try to build it here. And I'll tell you the challenges you'll have. Pick a
I know
product.
there's challenges.
Yeah.
I know there's challenges. I'd just saying it can be done.
I think that in the long run, it will happen
You say it can't
because
be
we'll
done,
be
Paul?
forced
Are you
to.
saying it can't be done?
I'm saying that the answers aren't going to be tariffs. It's not going to be so easy like everybody's
I
kind of
don't think he's,
indicating.
see,
Yeah.
I don't think he's gonna put the tariffs on because I think they're gonna bend.
I agree. It's just to me, it was to get votes. But regardless, I'm just saying the whole idea. I mean, I'd
No,
love to make things in the United States, but I
I
just
don't
know
think
that
it,
when
I think it has to do with fairness on tariffs. They tariff us. Our other countries have higher tariffs on our products going to them than we have on them. He's trying to even it out. Has nothing
yeah,
to do with votes, I don't think.
I,
Has to
I
do
don't
with him.
I don't have good knowledge. Yeah, sure. I maybe vote. I mean, maybe you're saying to even out the playing field. Okay, I'm just saying I don't know of too many products that you could go to anywhere. Give me a product and say, let's not build it over there. Let's try to make it here. And there's not too many of them that come to mind.
Don't we build cars
I've
here?
got,
Well, yeah, we do. I don't know how much of it's made in here. I mean, if you
Well, I
took a
mean,
car, if you took a Chevy, geez, how many parts? I bet you most of the parts are not made in the United States.
well, I don't know that.
I,
I think a lot of them are. Probably a lot more from Canada,
I don't know, Bob.
but
What are you saying?
Well, let
Because
me
Bob's
just
a
say
car guy.
this. If you take a look at the MSRP sticker on a brand new car, it prints what percentage of the car is made in the United States. I'm going to say it's less than 5%.
I'm just saying.
Hey,
I'm just
there's
saying
one
that's the
other
world
thing that you didn't
That's
say though on costs, and
that's the
that's the
world.
environmental costs.
That's the world economy, though, too. I mean, you go over to Germany and ask the people in Volkswagen how they're doing. Ask the people.
They're closing
I'm not talking
factories.
about businesses and how they're doing. I'm talking about where products are made. They're not made
Well,
here.
that's it. We assemble them here. Okay, why do they assemble them here? Why don't they just send them over there?
Because as a result, they get away
Cost.
from tariffs and things
Yeah,
like that.
exactly. That's why they want to make them in Mexico, right? And then they're
Hey,
talking about tariffs in there.
I
But
mean, he's already said China's looking at putting an electric vehicle down in Mexico
yeah,
and then
Well,
importing it into here. And he's
well,
saying, no, we're going to put a
you
tariff
know,
on that.
so
from my point of view, and being where I live, go talk to someone who's been laid off of John Deere and they want to put the factory down in Mexico. Talk to him about how fair that is, or how
it's not
quality is
fair.
better. How
It's
quality
not
is
fair.
better in Mexico.
It's not fair, but
I
just
hear
like
you.
just Trent just said, follow the money. The people are willing to work their ass off, not in the United States. I mean, it's just a fact. We've becoming
See, you're
lazier,
making
right?
see that's a generalization. I disagree that people in the United States won't work. I have a bunch of them all around me where I live. Maybe they don't work in Connecticut, but they work here in Nebraska. We don't sit around. Do you think the corn just farms itself out here? Do you think cattle just graze on their own and then take themselves down to the slaughterhouse and cut their necks off and process them themselves?
People generalize
Family
the
show.
younger people and throw us older people in that circle. And I don't know. I still work 2, 3 jobs sometimes.
Jason, you're an exception though. How about your friends? Do they work as hard as you?
Yeah, well, not as hard as me, but they work hard. They don't sit on their ass. I'll tell you that much.
But you know what I'm talking about, right? How many folks around you that you see like, dude, why don't you just get a job?
Yeah.
I don't have any of those people. I guess that's who you associate with.
I'm just saying
Yeah.
that different parts,
Those people will be
different parts of the
replaced.
country, different geographical parts of the country have different work ethics and attitudes, I think. I've been traveled all over the country. When I worked in California, at General Dynamics, my manager was from Ohio. He didn't hire any engineers unless they were from the Midwest because the engineers on the West Coast were gone by 2 o'clock afternoon. You didn't know where the hell they went. You know, he says, and his whole team was all from the Midwest. He says, I only hired from the Midwest.
Yeah, I think honestly, I think you'll see a shift. I'm hoping we'll see a shift in the attitude of working in this
Hope's not a
country.
plan.
And what's that?
The hope scares me. Hope.
I don't think we will.
Well,
You have too many youngsters.
I
We're the old couple. We're the old group. We're trying to retire, and that retirement is looking like a golden circle down the road. But man, you got younger people that I don't want to work. I want to make money as easy as possible. I'm going to do everything but crypto, Bitcoin, anything not to have to get my hands dirty.
Anything so I don't have to go to work, or I want 2 jobs remote. That's what I
Yeah.
hear a lot now. Like, dude, really? It's
Or
like
I want to be
crazy.
an influencer.
Yeah, and it's not like it was when I grew up, and I'm aging myself, where everybody worked. You're not getting a car. You're not going to get your dad's not giving you money. You know,
Paul,
you get to
Paul,
work. Yeah.
there is a group. You're absolutely right. There is a group of people who live on government assistance. We have built that system. And then there are people who are between that and ultra wealthy. I am very fortunate to be around younger people in their 20s, and the work ethic that these people have is insane. They're six-figure income households. They bust their ass. They work 7 days a week. They have startup businesses. They go through the pain and the issues at owning a business. Other ones, they work for companies. They work their asses off. I really think it starts at home, and there is a big segment of our country, I totally agree with, that don't want to work. They just want to get a mailbox check, and they don't. What's the easiest way? But there is a segment of this country that is between the ages of 21 and 55 who do want to work, who do want a better life and want to provide. And those, in my opinion, are the people who will rise to the top. This other segment, I have a feeling they're going to be pushed to go get a job in the next probably 4 years.
But doesn't it seem
If
like it's
if
swaying one way though? Doesn't it seem like it's go ahead.
What job will they get? I mean, that's the problem. You have these college kids coming out of college that still talking in a high school election, and they're trying to be, I'm going to go into the work world and make $100,000, and it's just not realistic anymore. They don't want to work retail. They don't want to do the hard work. At least in
when
my
it comes
opinion.
to
And I
living,
was a retail manager for years. I see it all the time.
I think,
I
I think,
I
don't
think you'll
go ahead.
go ahead.
I don't,
Go
you know,
ahead.
I guess I disagree with the generalization that all people are that way because they're not. I mean, I was just down south, and there were a lot of restaurants and bars where the young people who were going to college were working their asses off down there as bartenders and waiters and waitresses. So they're not sitting at home doing nothing. Okay. And I got to talk to them because I talked to a lot of them. What are you doing? What do you want to do? You know, and they have dreams, and a lot of them are, you know, I wish I was that young in this economy we have with the ability to use internet and to use, you know, AI and all the stuff that you can do now without having to walk out your door. You know, when I got out, I had to go to the office and, you know, where we made the product and, you know, be an engineer and travel to things. Now I can talk to anyone all around the world. You know, I don't have to leave. I don't have to do anything. And I don't have to have employees either. You know, that it's And so I think there's a lot more opportunity, at least from my point of view, that had I been getting out of college right now, that I could go out and make money for myself. And over my life, I've retired probably 6, 7 times out of jobs and just didn't do any, wasn't going to do anything and ended up 3 days later, consulting or doing whatever, because people needed me. And I said, okay, I've never had a problem finding the position. I've worked for myself a lot of times. I've bought companies, worked those. I've worked for other companies, big companies, small companies.
There's
I
no
just haven't
shortage of
had.
opportunity.
What's
There's no,
that?
there's no shortage of opportunity. If you want to work, you work. I'm saying
Absolutely.
that there's a shortage, if there's less willingness than there what, to me, the willingness is depleting, getting lower.
Okay,
That's what
I don't
yeah.
disagree with that, Paul. I don't
Yeah.
disagree with that.
No.
I don't think it's everybody. I do think that the society pushed people into thinking they don't have to work or they're entitled now. That would my grandparents and parents would be rolling in their graves if I went to them with that attitude. It's like Trent said, I had a job at 14. But the problem now is when I had a job at 14, I worked part-time for the city of Lincoln in the parks department, and I was cutting grass and painting ball stand. I was 14. Now they've changed the laws. You can't go do that anymore unless you're 18. So I couldn't even work at 14 anymore.
You could have
By
a paper
16,
route though, and you could go to the grocery guy and say, listen, I'll work under the table, right? You're laughing there, Bob. You know what I'm talking. You want to work, you want to make money, you can make money at any age, right?
unless you get caught doing that, then you get a big fine, as a
No,
grocery
I'm,
store or whatever.
yeah,
No,
the
let
point
me
is,
tell you another story. Let me tell you another
uh,
story about farms around here, Paul. Farms, we'd have kids, farm people would have kids who could work the farm, drive tractors. Now you can't unless you're 18. You cannot work the tractors. You cannot do it. You can't even
No.
go out and feed. Okay. It's against it's against the law because you're not 18 yet. It's too dangerous. Jan, when they had a farm, Jan, she used to, her dad would put her in the tractor. She couldn't even reach the pedal. She'd stand and he'd say, drive to that pole. Okay, while I was planting, and he'd hop on and turn the tractor around, and then she'd drive it to the next pole. That was when she
no,
was like 10. Okay, that can't happen
I'm
anymore.
saying you could work if you want to work, you can make money. If you want to
can.
work, and you could do it at 14. You want to work,
No,
you'll go and make money.
no, I agree. When I was
That's
young,
what I'm saying.
Right.
when it snowed, I got up at 4 in the morning, grabbed my shovel, and I shoveled all the way to school. And I hoped it snowed all day, and I'd shovel all the way home.
Yeah,
And I'd
find
make
another
money.
14-year-older now that'll do that.
I
It's
know
not, you
some
won't
here.
find,
No,
find,
I know
You
some.
will.
Well,
You
I
would-
guess around, I got kids that want to shovel and they want to do snow removal. I
Yeah.
mean, they do. Where I live, okay, my part of the world, and there's some that'll be lazy too. But I'm just saying that it's not everybody.
I think the biggest thing
I
is
got people want to cut my grass all
circumstances
the time.
will change. Circumstances will change. The environment will change, and people will be forced to adapt to a different way. I just
where's the
it's
opportunity,
like
baby? Where's the opportunity though? That's what we should be
there's
talking.
it's
Yeah.
everywhere. I mean, there's everywhere, and that's the thing is we need to quit sending out mailbox checks to everybody and make it easy. I mean, I saw this. It was a joke of a TV commercial where they came on. It was like the nightly news, and the guy says, U.S. government has decided to give an increase of 25% in Social Security benefits. But you'll have to, once you start receiving your Social Security benefits, you'll be obligated to work 60 hours a week at the local, and it is like a real commercial. And this lady's watching it and going, "What? But I'm retired," freaking out, just losing her shit. And her son's just sitting there filming the whole thing. And she's like, "That can't be real. Are you serious? We're gonna have to go back to work for our money?" It's that attitude change that needs to happen. And I think that is more possible today in the coming 4 to 10 years than it ever has been. And if we can put people back on the idea of, I have to work, I have to put in 40 hours a week, I have to make my own money. And if that doesn't change, you're right, Paul. There's a problem, a major problem.
I
And
think
we've
we have
got
a
to change
problem.
that.
Problem is, we're going to run out of money paying people who aren't working. Then there's a real problem.
Yeah, I honestly, this is the first time in my lifetime that I'm like very optimistic about a pivot in how we run our government. I'm hoping everything that's being built up around this new administration coming in really does make some financial changes to this country so we can get back on track. Um, I agree with you, Paul. Hope is not a strategy, but this is the closest I think I've ever seen in my short 55 years on this planet. But this
And I,
has to happen, or we got a bigger problem.
and I do agree with you, Paul. If you want to work as a kid, you can work. I mean, I got kids show up every summer. You know, are you going to square bail this year? Can we pick up square bails for you? Okay, I want to be paid. High school kids from the local, high school. So at least around here, the farm kids want to work. They want to earn money, during the summer, no matter what it is. But um, I don't think it's all people, but I do think we do have an issue, Paul, that people have gotten accustomed to not working. You're right. You're right.
All right, we got
Yeah,
some favorite stocks. Oh, sorry.
I had a question real quick about robotics. What are the robotic plays that you guys have seen? Because Kerry hasn't talked much about robotics except for that one company, Symbotic. I think it's SYM. And now you're talking NVIDIA I'm sorry, Tesla for the robots. But is there any other robotics plays that I'm talking about individual stocks here that you've come across or have heard of?
Does
The-
Rockwell
the co-
Rockwell Automation, do they do robotics, Paul?
I don't know. I don't know.
I think a lot of the companies that are addressing it, I know Jeff Bezos just dumped $100 million into I think it's iBot, I think it's called. Um, I think a lot of these companies are still private. Who is it? There's a big robotics company, Boston Dynamics. That's a company that I believe has been building out robots for a number of years. But right now, from what I can see from a publicly traded standpoint, I haven't dug deep into this, and I think it's a good subject to actually go deep into and discover where this is going. But right now, from what I understand, Tesla is one of the leaders because of how their robots are designed from they approach it with a first principles approach to how movement of a robot, and they've solved that, and they're supposedly one of the leaders in it. So other than that, and then some private companies, I'm not too aware, but I think it is a good subject to actually dig deeper into at some point.
Yeah, and Kerry's really good with research, and I wonder why he hasn't talked much about robotics, except that maybe it's just too new, or like the publicly traded companies are just not out there
Yeah.
as
I
much
think
as
it's
like, let's say, AI.
Yeah, I think a lot of this is like how soon to market is this a reality? Um, and right now, I think the leader in that, of course, is Elon and his efforts. Um, but once I think you see it hit the market and come in at a price point that a company can afford it, that's when you're going to see a lot of headline news on it and a lot of spotlight put on it. But right now it's a matter of how to identify a robotics company and what is it applicable to, and is it going to solve a deep pocket problem. Um, and that's how I would go about figuring it out. But I do think it is something that should be paid attention to. It sort of, in a way, goes hand in hand with the whole AI movement, because it's, I mean, it's large language learning that goes into the robot's head eventually. So,
I
but
think really what Kerry's focusing on right now is developing the road for AI. That is for the semiconductors. All right.
yeah,
And then he feels that after a period of time, maybe 2-3 years, then we're going to be branching out into other things that will be beneficiaries of AI. And he puts it this way: when we built the national highway system, and it's all built, then the Holiday Inns and the Exxon Mobil's built gas stations and lodging, and they have been the long-term beneficiaries. The people that build it, yeah, they got the money when they build it, but when it's all done, no more money. All right, they go bye-bye. they do something else, but it's really the beneficiaries, and which he analyzes it to our national highway system is gasoline companies and lodging companies and eating companies.
Yeah. I think one of the thing I heard this billionaire speak, he's from India. He says if you want to know what the future is and what to be, what companies to start, what investments to make, ask somebody who is 16 years old what they're going to want in 10 years. Ask somebody who's 21 years old what they're going to want in 10 years. 31 years old.
Check from government.
Don't ask somebody who's in their 60s or above, because they're not going to be around. All they're going to want is healthcare. All they're wanting is senior living. And honestly, that's the honest God truth. So there's a sector that's an opportunity is senior living. I got one being built down the road for me. And I mean, they start at 80K a year. I'm like, it's ridiculous. But um, but when you look at what's going to happen, I look at my 21, 22 age group, and I'm like, what is Emma going to want and need and demand from the world in 10 years? And that once we figure that out, that's that's where the next big investment is. That's where the next opportunity. I was listening to something just recently. They were talking about the next big move in the next 12 months is voice command. So talking into your phone. Voice, I think SoundHound is one of the example of this. But voice driven dictation, and that product becoming more and more sharper and sharper and more better, because I get tired of texting. Whereas if I can talk into my phone or I can voice command something, I think that's going to be an area to take a look at as well. And believe SoundHound is one of those companies who does that. But I've started to dictate stuff more into on my phone now versus texting it, and the accuracy is getting way, way better, way, way better. So
I listed my favorite stocks. Anyone else have any favorite stocks to share?
I think Meta is my large cap growth stock of the year.
Hard to go wrong with Meta.
Hey, Trent, I found out.
What's
I
that?
find out by accident that the iPhone can actually record a call and dictate a call while you're on it.
I found that last week.
Yeah, I did totally by accident. I was like, oh crap, that's evidence. I mean,
Yeah, yeah.
Well, that's what
that's how a friend. That's how a friend of mine won his divorce case.
Aren't they getting sued for that right now? They're in trouble, right? Apple is in trouble with Siri. There's a lawsuit. They just settled for lots of money.
Oh,
Really?
Anybody,
Oh,
Brad,
privacy?
you know that? Yeah. Siri's listening in on them.
Yeah, they're all listening to us.
That's why they're down, by the way. That's why Apple's getting slammed.
By the
So
way, there is one other thing that's of national importance today. What do you suppose that is? The acquisition of US Steel
oh yeah, I saw that in the
Oh
news.
yeah.
is down.
Japan said they're going to sue if Biden doesn't allow it to happen. So that'll be interesting.
They're gonna
Yeah,
what?
good luck
They're-
with that.
They're ready to sue if it doesn't happen.
Yeah, good luck with that.
Sue who?
Yeah, exactly.
U.S. government? I don't know.
Good luck with that.
I
It was a
love when they
headline.
say that
It grabbed my
we're gonna
attention.
sue. I'm like, who are you gonna sue?
They don't have any money in Japan. I don't know what the hell they're gonna do.
I like Spotify. I listen to it. I've been listening to it for years for music, and now the podcasts, and I'm only finding more and more people do it. So to me, that I would invest in that at Spotify.
There's a company, I think the symbol is J, and
Jacobs.
they are, what's that?
Jacobs.
Yeah, I think they're in the data center development or construction business, if I remember right. That I thought was interesting. Just any sort of building of housing of some technology of some sort, I think it'll be interesting.
Infrastructure.
Infrastructure.
Yeah, I've been watching Jacobs. Also, Palantir is a hot meme stock. I mean, I know that they're involved in defense and cyber for the government. I know they passed the 40-in-1 rule, and I haven't gone wrong with Palantir. It's just the freaking retailers, investors, and I think there's I think there's low risk in that just because it's popularity. And Reddit is another one. I like Reddit because the young generation's using it like crazy. So those are my picks.
Those are good ones.
Anyone
Let me
else?
just
I'm
say
sticking
one
with,
thing.
I'm sticking with Berkshire.
Oh, yeah.
To the gentleman that was talking about robotics, and you were trying to come up with names. And at the beginning of the year, last year, I was on a cruise, and I was sitting at a table with a retired manager of a Walmart distribution center. And he was familiar with Symbotics. Well, we all are. That's one of the ones that Kerry talks a lot about. But this guy had some other ones, and I happened to keep the names. I never looked at them. Dematios, Dematics, I believe, not Dematios. It's got a C, not an O. And then there's Rapist, I think AN. Then there's Siemens. And Siemens is a well-known company. Then there's Symbotics. Those are the ones that Walmart is using in their distribution centers.
Right. Well, maybe
What was
next week
that
we
one?
can come to the table with a couple new ideas.
I'm sorry, Trent, what'd you say?
I said maybe next week we can come to the ideas or come to the table with some robotic ideas.
I just,
You know.
ideas in general. I mean, I'm trying to get us talking about what some people have conviction in.
So
Except for Mark. Mark's got conviction in Berkshire. I know that.
I've actually been getting it.
Go ahead.
So Paul, I've actually been getting into value stocks, trying to kind of set some plays up at the beginning of the year for how I think things are going to go. And I just feel like a lot of these value stocks have been neglected over the past few years, and there's a lot of potential there to for like some real good plays. And you know, obviously Berkshire is a good one because Berkshire invests a lot of money in value companies, and so that one is more. I see it more as like I don't know, kind of like an ETF for value. But you know, even though they do have a lot of tech and financials and stuff like that, but I've been looking at other things like advanced auto parts, some materials stuff. Also, I feel like it's a good play. Some healthcare. I don't know. I don't want to go more into individual stuff,
No.
but
Why not?
you know,
Let's
Why not?
Because we got a time limit here.
yeah, let's do that next week. Let's everyone bring your ideas and we'll talk about it and we'll spend the whole hour and a half doing that.
That's a good idea.
Sound good?
I like that because I like that idea because there's conviction out there, and if you can say, geez, like I'll tell you I could sit here and talk a few minutes about Spotify, but I think you guys get it. You know, have to.
Let's everyone bring it. Let's limit it to 3 each, so everyone has a chance, and a little bit of a commentary why you like it, and a little bit of discussion, and we move on to the next guy or
I
gal.
think that's a healthy thing to fit in a segment.
Is that good with everyone?
That's a good
And if
idea.
we have any charts we want to look at for swing trading, we'll run those in there too.
Thank you
There we
very
go.
much, Mark and Trent.
Yeah, thank
You're
you
welcome.
guys.
Thank you, Bob. Thank you, guys.
You know,
We're
this
looking forward to this year.
Yeah, it's going to be fun, and enjoy your weekend, and we'll probably see you at the 3 o'clock call, and get ready for another robust and fun and unexplainable new year.
There you go.
All
All right,
guys.
take care.
Thanks,
See
guys.
you later.
Thanks, guys.
Toodaloo.
Thank you.
Have a
Bye-bye.
good one.
Bye bye.